Well, good day, everybody, and welcome to the VectorVest International User Group Forum for Saturday, March 2nd, 2024. So glad to be everybody. Let me just check the chat and see who's in the room. Looks like we have people from Maryland, Richard from Maryland, Marguerite from Oakville. Hey, Marguerite. We've got from Atlanta, Tucson, Arizona, Basil. All right, so good morning, everybody out there in VV Nation, wherever you happen to be tuning in from, and whatever time it happens to be for you there. We've got an excellent show lined up for you today. So let's carry on here, and let's get these slides moving so we can get into things. All right, here's our risk disclaimers. Everybody knows there is risk in investing. Everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we have that risk disclaimer out of the way. Here you can see the agenda for today. So, as it says there, I'm Rick Franklin, so happy and pleased to be here hosting this with you, and glad everybody is taking time out of their weekend to join us here. Yeah, hey, I see Tony in Ottawa. I am broadcasting from the Ottawa area for this webinar. Hey, Don in Edmonton. We've got Kendrick in New Brunswick. All right, people from all over the folks, John from Vancouver. So we will be doing a global market review. I'll take us through the VectorVest markets around the world. I am joined today by Mr. Jerry D'Ambrosio, Manager of Educational Content. So he'll be covering trade ideas and a little bit of a surprise for everybody. And our keynote presentation this week, we're joined by none other than Susan HayesCulleton, Managing Director of VectorVest Europe. So she'll be doing a keynote presentation entitled Taking the Pulse on this week's earnings. All right, we just need to add 3 more people and we'll have the Brady Bunch going there. Hey, so this is being broadcast on VectorVest YouTube channel, so the recording will be available immediately after the webinar on the same location. All right, so with all that said, we're going to dive right in here and start moving along. All right, so the global market review. Here you can see the color guards for both Canada and the US. So if you look at Canada, year-to-date returns at 3.79%. You can see our color guard here. We've got the color guard is mildly bullish. We're 1 tick into the green. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. You're going to see a very common thread through all of our color guards in the VectorVest world here. So you can see the extended version of the color guard in Canada. We have quite a few green lights in the price column. What you'll note is no confirmed green lights in all of this time frame, and it actually extends past the extended version that we're looking at here. But you can see we did have a pretty good day on Friday. We got some movement up in all of our indicators here. All of them were up day over day and week over week. You can see our MTI is getting to 1.18, so it's getting close to that 1.20 and above. But we are in an up situation, and you can see down below green in all of our proprietary market timing signals. Our confirmed call, DEW, green light buyer, primary wave are all up. Some of them have been long running. You can see confirmed calls and DEW from all the way back in November. Green light buyer more recently. We've got 2 days of green lights in Canada as of the 29th of February. And the primary wave has been back up since the 14th of February. In the US, you can see the difference they had on Friday. 3 ticks into the green, color guard is bullish. VectorVest advocates buying safe undervalued stocks that are rising in price at this time. You can see the 3 green lights right across the top of the color guard. So again, with the US, we do have all of our indicators up day over day and week over week. And you can see again, we've gotten quite a lift here again in the BSR. The BSR has been going back and forth since November, really, losing quite a bit of ground through certain periods and then gaining it back fairly quickly. So we do have the MTI here in the US at 1.35. Not quite as close to topping levels as we have in Canada. We're in an up situation, and you can see also down below all of our proprietary market timing indicators in the green. The confirmed call is the longest running one in the US market from back in November. All right, you can see the more recent changes there with the green light buyer, primary wave, and the US did have that whipsaw of the DEW, so their DEW turned back up on the 19th of January. You can see Canada's has been running since the 3rd of November. All right, so on the side here, we do have the January roundup for all the nations. You can see the US was actually the only one in the negative January, just slightly so, but you can also see once we get to February, they really picked up the pace and outpaced everybody else. So year to date, US, you can see at 3.91%. Moving on to Australia, coming in 3.92% year to date. And you can see their color guard one tick into the green. Color guard is mildly bullish. VectorVest advocates buying safe undervalued stocks that are rising in price at this time. Top row, you can see 1 green light, 2 yellow lights, and they are in an up situation. Again, just like Canada and the US, all the green lights have been unconfirmed. And just like Canada, Australia is struggling to get green lights in the RT and the BSR column. If you noticed in Canada, we didn't have any green lights. They're only in the price column, whereas the US was able to get quite a few green lights in the RT and the BSR column over this time frame. All green as far as our proprietary market timing signals. Down below, you can see again confirmed call and DW have been long running in Australia since November. Green light buyer turned back up on the 22nd of February, and the primary wave turned back up on the 15th of February. And moving over to the EU is 1 tick into the green. Color guard is mildly bullish. VectorVest advocates buying safe undervalued stocks that are rising in price at this time. And the EU year to date, 3.08% gain. Okay, and their color guard looking a little bit more like the US, where they have been able to get greens in the RT and BSR column, but you'll see the same trend. Not as many green lights here, but all unconfirmed green lights as well. And you can see where the indicators are sitting here. We've gained some ground. They had a pretty good day on Friday too. Gained quite a bit of ground in the BSR there from 159 to 198, and their MTI from 136 to 1.42. So they are in an up situation. And here you can see all of their proprietary market timing signals up. Confirmed calls, the longest running one. They also, like the US, had a whipsaw of the DEW in January. So theirs turned back up on the 24th of January. And their green light buyer and primary wave just came back up on Friday, on the 1st of March. All right, so that's the color guard of all the countries. Let's now move to run through the market timing graph. And we're just going to run through these fairly quickly here. You'll see a common thread here as well. All right, so this is Canada. So you can see we've had this run up. This is actually, we've got a 52-week low on the 27th of October, fairly close in all countries. And you can see the run up that we've had and we've been enjoying. But you can see as price has been moving higher here, all of our proprietary market timing indicators We've got bearish divergence with all of them. We're not putting in the higher highs we're seeing with price. So there you can see the MTI buy to sell ratio and RT in Canada showing those bearish divergences. The other thing I'll point out is because we aren't getting confirmed green lights in any of our markets, our moving averages on RT are trending down as well. So definitely having some warning signals, even though these markets do continue to chug higher. And you can see on Friday, pretty big day there, not just in the Canadian market, but in all of the markets. So looking at the US, we'll point out the same thing. So you can see price moving higher, putting in higher highs, but none of our indicators. So the same bearish divergence, and just like Canada, Canadian market, and some of the other markets too typically follow the US. So big day in the US, big day in Canada there. So you can see the candle there on the US side. All right, and same thing to be said for the moving averages on RT trending down instead of up in the US market. Here you can see Australia. And again, you can see right from late October, that's when the rally started in all four of the markets, been moving up nicely, and we have the same bearish divergences there. Looks like Australia might have finished on a bit of a doji on Friday. And here's the EU. Nice run up again, bearish divergences between price and our proprietary market timing indicators, and not the strong. So just like Australia, not quite the same strong bullish candlestick on Friday that we saw in Canada and the US. All right, so that's the market timing graphs. Let's take a look at, so this is the monthly comparison for our performance, or the performance of our global market tracking ETFs that are found in the US software. Right, so you can see we had quite a difference between January and February. January, we had 7 winners, 13 losers. All right, you can see the VVC in the US, as we mentioned before, it was actually down 0.67%, and overall, this basket was down 1.61%. You can see the, let's just look at the top 5 leaders in January were Japan, Netherlands, NASDAQ, S&P 500, and then ESGU and ESG MSCI ETF. Right, in February, we had 20 winners, so February was definitely a good month. 20 winners. Here you can see the VVC was up 4.62%, this basket 4.7%, and our top 5 leaders here were Israel, China large cap, Poland, Italy, and Germany, rounding out the top 5. So if we advance here, we've got the same slide here, or the same left-hand side for February, and then we have the year-to-date. So year-to-date, you can see 15 winners, 5 losers. All right, and just over 3% for the basket. Rounding out the top 5, we have Israel, Japan, NASDAQ, Netherlands, and the S&P 500. Right, we've seen the NASDAQ stay pretty much near the top, which definitely helps that new NASDAQ ETF trading strategy. All right, so now we'll move on to the market sector ETFs. These also found in the US software. Right, you can see it's a watch list in the cherry picking folder. So for 2024 performance, you can see the basket up 1.32%, and a lot of the same top performers in here over the last period from one month to another. You can see semis leading the way here, 21.2%, next gen media, 11.26, and then we have communication services, XLC, up 9.22, XHB home builders 7.75% gain, and XLK and S&P 500 tech select ETF. Right, and on the right-hand side, we have the 10-day delta. So you'll see some of the same ones in there, SMH. And we've got iShares US Home, ITB. There you have XHB again. XRT is retail. Retail doing surprisingly well in a lot of markets. And Spotter Materials, XLB, rounding out the top 5. All right, so that's the performance of the market sector ETFs. Now we'll get into essays. So Friday's essays, another excellent round of essays, folks. I hope everybody, if they weren't able to go through and read these essays before today's webinar, hopefully you're able to get in there and read them by the end of the weekend. So out of the US, essay by Angela Akers was entitled The 2024 VectorVest ETF Challenge. Of course, the strategy of the week from Glenn Tompkins Jr. Also did a quick little highlight on that. So announcing the 2024 VectorVest ETF Challenge competition that will run from April 1st, 2024 to June 28th, 2024. If we drop down to Canada, from Stan Heller, his was entitled Money Sense Dividend Stocks to Watch in 2024, a VectorVest Perspective. All right, so how to use VectorVest to analyze Money Sense dividend stocks watch lists. So those folks not in Canada, Money Sense is a website and they produce lists of various different stocks. This one happens to be for dividend stocks. So another excellent essay there as well from Stan Heller. Hope everybody can check that one out. And the EU from our very own Susan HayesCulleton. Hers was entitled A Sea of Yellow, how to use VectorVest Color Guard to analyze what's really happening with the trend in the market, and mentioning the fact that how many yellow lights, not just in the EU, but all of us are seeing in our extended version of the Color Guard. And then from the land down under, Robert and Russell Markham, theirs was entitled A Bearish Divergence. Common themes, as I said before, in all of the countries. So how to use VectorVest tools to analyze the current market trend, and a warning about the bearish divergence in the Australian market. All right, so that's the roundup of the VectorVest essays from around the VectorVest world. Now, as part of Angela's essay, she did include the March Almanac. So we have that here. And you will see in the last 28 years, the BBC has experienced 16 wins with an average gain at 2.5%, 12 losses with an average loss of 3.39% over that period. And you'll also, for those that are kind of keeping an eye on, this is a presidential election year. So the BBC has lost ground in 4 of the 6 election years in VectorVest history. All right, so that's the March Almanac. And there was a earnings update, so we are in earnings season. We are starting to get close to the end of that earnings season. So at this point, 97% of S&P 500 companies have reported their Q4 earnings. So we've got 73% beating their earnings estimates and 64% reporting revenues above estimates. All right, so that's a quick roundup there. I think we're in pretty good shape here. And at this point, I'm going to bring Jerry in. So Jerry, if you're ready, I'll let you take over here.
Thank you, Rick. Appreciate it. Well done. Good morning, everybody. My name is Jerry D'Ambrosio. I'm the manager of educational content here at VectorVest. Happy to be back with you guys here on this beautiful Saturday. It's actually a little cloudy here in the Charlotte area. But I'm very excited about today's segment. I'll be doing a few trade ideas. I cherry-picked a few stocks from each country, a couple from the US, one Canada, one Europe, one Australia. So I'll go through the charts there and kind of explain the setup, explain the trade. And then I'm going to spend a lot of my time talking about the ETF challenge. Like Rick said, Angela wrote about our new ETF challenge. This really stems from Tampa. If you guys remember, we unleashed a new trading system, an automated trading system that trades the Qs, trades the NASDAQ, one position. I wouldn't say it's basic, but it really stemmed gave birth to a lot of different ideas surrounding the same approach. Trading one position, using VectorVest market timing signals, trading broad market ETFs, I think positions or instruments that we're all familiar with and used to. We had a few subscribers not too long ago, just a few weeks ago, submit some of their trading systems using the QLD and TQQQ, just fantastic stuff. So today we're going to talk about how you can kind of take these ideas for yourself and develop automated trading systems. Doesn't necessarily have to be with the Qs or the S&P. It could be with any ETF that we track in the program. But I'll talk about that a little bit here. But the first thing I want to do, first off, I got to share my screen, make sure you guys can see everything here. So the two stocks that I'll talk about here for the US are actually two stocks that two trades that I took yesterday in our swing trading coaching group. If you guys are swing trading coaching group members, you know I sent out an alert, did a little pre-market trade video on a few of these setups because we've been looking at SMCI and AMD over the last couple of weeks, and they really haven't shown us much in terms of a bullish opportunity or a bullish setup. So here we're looking at SMCI, and I have these lines drawn on the chart. These are what's called this pattern here that you're looking at is called a bull pennant. You got a really significant up move. This stock went from 400 to 1,000 in about a month, and you can see it was accompanied by really heavy volume. Then the stock sold off there, right? The high was on February 16th. The stock sold off, went down a couple of days. Nice little hammer pattern here on February 20th. And then the consolidation really began. Okay, the price stock began to consolidate. It wasn't a mass exodus. It wasn't a mass selling pressure or extreme selling pressure. But the stock price began to form lower highs and higher lows. This is a classic pennant. It's a variation of a triangle. And then we finally had the breakout. On some pretty good volume on Thursday and then follow through yesterday. I think this stock has a ton of upside, by the way. Report just came out yesterday that they are going to be added to the S&P 500 this month. The stock was up 13% after hours. So the stock is already at $1,000, well, a little over $1,000. I know that's after hours. We'll see how it opens on Monday. But my profit target was the swing high. Initial profit target was right around $1,000, which was the swing high. So hopefully, Monday brings us a good day. We can take some gains on this quick trade. I don't think it's too late. I do like the setup. I want you guys to keep SMCI in your watch list. This should be a stock that everybody has on their radar. They're in the semiconductor, microchip, AI space. So a lot of upside here with this one. The next one is AMD. This stock finally broke out too. We were keeping this in our watch lists. This was also a bull flag, a variation of a bull pennant. So there's the period of consolidation, rather long. That was about a month. Stock made a pretty strong move there, making a new 52-week high above 180 on some really heavy volume. And then you saw what happens, right? Volume begins to dry up. The stock begins to consolidate. Never during this period here do you consider taking the trade. Okay, you don't trade during these quiet periods or these periods of consolidation. You could see volume for the most part drying up as well. Finally got our breakout on Thursday and then follow through yesterday. So that was the setup. Again, a ton of upside, I think, with AMD, also a semiconductor. but you could see the heavy volume coming in. So if it's not this stock, guys, this should be the type of pattern and behavior that you favor. Quiet periods, periods of consolidation, volume drying up, and then you get your breakout on really high volume. No matter the stock, I know we're looking at AMD here, but no matter the stock, this type of pattern and price action should be things that every trader should pay very close attention to. Okay. All right. So that's the US. Let's see here. Jay says SMCI during trading hours up 5% on Friday. Yeah, it was up early on Friday as well. Yep, SMCI added to the S&P, Brian, up $100. It was after hours, so got fortunate there. Okay, so let's look at the Canadian database now. CXB was my choice. This was a nice emerging trend here. You could see during this period, stock was in a downtrend. That's about 6 or 7 months from July to January, right? You just draw a trend line. I'll draw an extended line here, connecting those lower highs. Downtrend. It's also a descending triangle pattern as well. You really didn't see lower lows, did you? Right? So you saw lower highs, but you didn't see lower lows. Wait for a breakout here or wait for a trend change, and that happened. That happened back in February, just last month, beginning of last month. You got your trend change. It was accompanied by really strong volume. The red line, by the way, is a 20-day EMA, and the green line is the 50-day simple moving average. So just fast forward here, we're in a nice new emerging uptrend. Downtrend is over. We're in a new uptrend. The stock has transitioned to a buy rating as well. The RT has gone from below 1 to above 1. It's at 1.51, nice level now. The stock recently just pulled back and kissed the 20-day EMA and retraced from it. So I like this one as well. Again, transitioning into a buy, nice new emerging uptrend. All right, so that's CXB. We'll look over in Europe. This is EGL.LS. This is a top VST stock. So here, you want to look at all time frames as well. So we're looking at a 1-year time frame, obviously bullish, right? Price is higher over the last 1 year, 6 months, 3 months, every time frame is bullish. I like this trade here because it just recently pulled back, kind of settled down a little bit after another new 52-week high to its 20-day EMA. And you might ask, well, why the 20-day EMA? Well, with this particular stocks, it looks like the 20-day EMA does serve as nice support, doesn't it? So sometimes it's not always the 20-day EMA. Sometimes you might put an 8-day EMA on, or maybe it's a longer-term trend, and you have a 50-day moving average on the chart where price has pulled back to the 50 a number of times and kissed it. Here it happens to be the 20-day EMA, just a very widely used exponential moving average. It's more of a shorter-term moving average. So nice pullback to it, kiss of it, and retracement off of it on some pretty good volume. So I like EGLS as well. And then finally with AU, this one is a watch list stock. So the other three I think are, hey, trades on Monday. If follow through is achieved, then the markets are moving higher. This one I need to see a little bit more of a breakout to the upside. It seemingly looks like it wants to break out. Look at that volume that's come in over the last 3 days, but it is having a hard time breaking above and closing above that zone, right? It looks like it's about 284. So this is what's called an ascending triangle. You got this pattern of higher lows here. After the new high, price pulls back, puts in a higher low, and continues to do that up until the hard right edge, right? Higher lows, but we're not seeing higher highs. This is an ascending triangle. We look for a breakout to the upside on strong volume. I think that might happen. Volume might be strong if we do get a nice breakout to the upside. So love this setup. This is more of a watch list stock. If you do trade in the Australian market, more of a watch list stock. I just look for the highs here. That high, which was 292, we're at 282 now. I think it's worth it to wait another 10 cents and make sure that we break out here to the upside. Okay, all right, guys, that's it for the trade ideas. Let me look at the chat just to make sure I'm not missing anything. Nice, Cam. Thank you, Jay. Appreciate that. So, guys, I'm going to spend the rest of my time here talking about the brand new 2024 ETF Challenge. I kind of gave the backstory a few minutes ago on why we decided to do this challenge. And it's because of so many great ideas that you guys have already submitted stemming from the Triple Q's trading system, the automated trading system that we unveiled in Tampa at the beginning of January. So really excited about this. You can go to www.vectorvest.com/ETF-challenge for more information. I'm actually going to take us there right now. vectorvest.com/ETF/challenge. And here are the rules. And I want to spend some time going over the rules. I think it's important. Any questions that you guys have about any of these, let me know now as we go through them, clear up any confusion, because this thing starts here pretty soon. So the rules for the 2024 ETF Challenge are each VectorVest 7 subscriber is allowed one and only one entry. So you do need to be a VectorVest subscriber to join the ETF Challenge. All competition portfolios will be utilized in the VectorVest 7 US platform. Okay, you might trade other countries, but the competition will be held in the VectorVest 7 US platform. This contest is using ETFs only. You may build your own trading system or use an existing qualified trading system in VectorVest 7. So no stocks, ETFs only. If you hadn't watched Glenn Tompkins' special presentation from yesterday, watch that because he gives you some tips on how to find ETFs just in general. Don't forget to tune in next week because Steve Chappell is going to do a special presentation on backtesting. Okay, so if you're not familiar with the backtester, totally comfortable with the backtester, you can begin to kind of test some of your ideas now, but make sure you tune in next week for Steve's special presentation on using the backtester to create your own automated ETF trading system. Each entry must be automatable, must use automatable VectorVest 7 trading systems within the VectorVest 7 portfolio manager. So that is where the competition will take place in the Genius, in the portfolio manager. Once your trading system is deployed, it cannot be changed or altered. All ETF selections must be greater than $1 per share and have an average volume greater than 250,000 per share. Those are the minimums. You can, of course, increase those values if you decide to do that, if you want to do that, but those are the minimums. Each custom watch list are permitted assuming they meet the selection criteria. So if you're using a custom watch list and you have a bunch of ETFs that are in there, make sure that all of the ETFs have a price greater than $1 and have an average volume of 250,000 shares. No shorting is allowed. However, contra ETFs, inverse ETFs are allowed. You can't short stocks. You can't short ETFs. We're gonna buy ETFs, whether they be bullish ETFs or bearish ETFs. Okay, no shorting. The use of market timing is encouraged but not required. Competition portfolios will show up in the Portfolios tab in VectorVest 7 under the Contests Portfolio section. Competition portfolios will be preset with $50,000 and 0 commission. The competition portfolio will be added to your VectorVest account by Saturday, March 30th, 2024. At this point, you may enter your trading system into the Genius and turn it on. So let me go into my VectorVest 7 real quick. In my US product, right, if I go into the Genius, we have a contests portfolio here. You will see on March 30th, end of this month, you will see an ETF challenge portfolio listed here. It will be preset with $50,000 and no commission. That is your contest or challenge portfolio. I think on March 29th, the day before the portfolio will be inserted into your program, Jim Penna, I think, is going to do a presentation on deploying your trading system, deploying the portfolio, the trading system that is in your Genius under contest portfolio. Okay, competition will begin at the markets open on Monday, April 1st, and end at the markets closed on Friday, June 28th. Now, even though the competition begins on April 1st, you do not have to start on April 1st. If you say, you know, I want to wait a couple of weeks, my market timing signal isn't lining up right now, I want to wait. You can wait. You don't have to deploy the system on April 1st. You could do it anytime after April 1st. But the portfolio challenge ETF challenge will close on Friday, June 28th. You may deploy your trading system again at any time after March 30th. Entries may trade in end of day, intraday, or real time. Any and all ties will automatically default to winning trade percentage as the tiebreaker. So it is, I go into the back tester here real quick, percentage of winners. Okay, now that's displayed differently in the Genius. If I go here, let me go to just this one here. Okay, in the summary, so we're in the Genius, right? I know I'm in my portfolios, but I'm in the Genius. Let's just, for all intents and purposes, say this is my ETF trading system. You go to summary report, and it's this column right here. All positions closed. This winning percentage right here is going to be the tiebreaker. 58.67. You could see here in this portfolio. All positions closed. 58.67. Okay. Any violation to the rules will make you ineligible for the prize. All VectorVest decisions are final, and all submissions become the property of VectorVest 7. During the contest, access to the auto timer will be provided. Everybody will get the auto timer. The auto timer includes the ability to use market timing. So this is the Portfolio Genius. This is what your screen is going to look like, or close to it, when you deploy your trading system. If you decided to use market timing, that will be the first segment here, the first box. The ability to use market timing signals within a backtest or a portfolio requires the auto timer, okay, which again, everybody will get during the competition. Okay. First, cash prizes will be awarded. First place will get $500. Second place, $250. Third place, $125. All U.S. dollars. And there will be a bonus. VectorVest Choice Award of $500 will be awarded as determined by VectorVest. This may or may not be one of the top 3 winners. Okay. Haven't quite decided the criteria yet, but it will be a VectorVest Choice Award given to kind of a honorary winner. Okay. All right, guys. Any question? Duration of the competition, it will close, like I said, if you go to vectorvest.com/ETF-challenge. Competition ends on Friday, June 28th. There you go, Cam. Okay, Friday, June 28th. Begins on April 1st. The portfolio will be put into everybody's VectorVest 7 US account. If you want to participate, you can. But those portfolios will be put into your contest portfolio section within the Genius on Saturday, March 30th. That's a Saturday. You can deploy the system as early as Monday, April 1st. And again, you don't have to deploy it on that day, but that is the earliest that you will be able to participate. All right, rants, nice. Bought SMCI yesterday because I saw the 3 begin to cross the 8. Good, sold it after hours for a nice gain. Yeah, like I said, it was up about 13% after hours. So hopefully Monday brings us a good day. I'll take some profits on that, and then raise my stop and let the rest run. If you're a Swing Trading Coaching Group member, you will know exactly how that trade will be managed. All right, guys. Well, I'm going to turn things over to Susan. She's going to close the session here today. Talking about earnings season. How you doing, Susan?
I am doing really well here. Thanks so much, Jerry, for handing the reins over here. So hello, everybody. And I am joining you from a very wet Ireland. Now, I know many of you might say, isn't Ireland always like that? No, it's not. And even if it is, that's how Ireland is so beautiful. So hello, everyone. I am delighted to be back here at the International Forum to talk to you specifically about what's going on during earnings season at the moment. So here's the way we're going to run this. First of all, I'm going to show you my search. Some of you will have seen it before if you have seen me present before around this topic. And what I'll do is I'm going to show you my search which will pick out the stocks that I'm looking at this week in terms of their earnings reports. Now, the second thing I'm going to do then is I'm going to show you why I picked eBay and Hewlett-Packard. This is before their earnings came out. I picked the stocks to look at, and I'll show you why. And I'll also then take you through what happened in both of those earnings reports, as well as how the market reacted. It was two very different reactions. In the case of eBay, the stock jumped. In the case of HP, the market was a lot less impressed. But it's interesting just watching where both stocks are at now when it comes to the VectorVest indicators. Just like Jerry said, of course, we're happy to take any questions or comments, etc. I have got my screen over here on the right-hand side where I'm watching all of your comments come through. So I'll make sure and do that as well from my side. Now, I know I have a tendency to speak a little bit quickly. It comes with the territory of dealing with a feisty Irish woman. But of course, as you know, everything is being recorded and is being recorded now, right now, live on YouTube. So you can always go back and look at anything. But I certainly do esteem to show you everything that you can take and replicate yourself. And of course, the earnings call details are all publicly available on the two stocks investor relations sites as well. So everything that I'm going to talk about today, you'll be able to see yourself. Okay, so what I'm going to do is I'm going to share my screen. And as I mentioned, first thing I'm going to do is I want to take you through the stocks that I'm looking at in the week ahead. Okay, now there we go. And I'm going to take this right away. Okay, so what you can see here, this is what I call my earnings call with fundamental search. And what I do here is that I first of all look for stocks with earnings that are 5 days out, but under 10 days. Because what I want to do is I want to get the chance to take the time to look at these and to plan whether I will or not. I obviously, as well as you can imagine, if I'm looking at this on a Saturday, there's no point in me looking at tomorrow or the day afterwards, maybe. But what I do like to do is just give myself a little bit of time then to see what is happening. So what this does is it doesn't show me what's happening, as you can see, in the next couple of days, but a little bit beyond that. And then also less than 10 days out, because of course there could be stocks that meet my fundamental criteria, but if they're not happening for ages, I want to be able to plan and to see what's going to happen along the way. So what I always look for is a stock to have above VST of 1 to make sure that the value, safety and timing of the stocks that I put in here are above 1 for a start. And I also have a pretty high bar for relative safety. I want those to be above 1.2. So in this case, what I'm looking for are stocks that have relative safety levels above 1.2. I'm not just looking for above average. I'm looking for well above average and favorable. And then the other thing is that I want my stocks to be rising, of course. So what I look for are stocks where the buyers are winning the war against the sellers and the stock is on an upward trajectory. In essence, what I'm looking for here is an RT above 1. And of course, I'm also, to make this very difficult, making sure that the stock recommendation is a buy. Now, to those of you that understand exactly how the VectorVest system works, you will know that because I have a buy in here, that means that this RT above 1 and VST above 1, I actually don't need. Because of course, to get a buy recommendation in VectorVest, you need 4 things to happen. 1 is VST is above 1. 2 is that the stock price is above the share price. Also that the stock price is trending away and trending upwards, as well as the fact that RT is above 1 as well. So as a result, we are looking for a lot of things already in a buy recommendation. The reason that I have all of this laid out in the way that I do is to make sure that everybody can see what is important to me as I'm looking for this, because I want to make sure that my fundamentals are right. And then I have RT in here to make sure that in the main, my technicals are right as well. Okay. So this is what I'm looking at in the days ahead. I'm looking at Broadcom, Marvel Tech, Costco, Cartes, Miller, and Hudson Tech. Now, sometimes I'll repeat that because that was an oxymoron. Sometimes I look at the earnings of companies that I wouldn't be very familiar with. Sometimes I come across companies where the businesses I wouldn't be very familiar with. And sometimes I see an earnings call coming up for a company where maybe I'm a customer, or maybe I have bought the stock already, or maybe for some other reason that I might have come across it, that I take an interest in it. But one way or the other, when it comes to looking for new ideas, both for looking at earnings calls, as well as determining which stocks that might be interesting to me along the way, this is generally what I do. However, when it came to picking the 2 stocks that I picked for you today, it was a different approach. because I got feedback recently enough. Well, when I say recently enough, I'm going to say in the past couple of months. One subscriber reached out to me and said, it's really interesting, your search, Susan. And I was very interested in the way that you analysed the company the last time. However, I wasn't familiar with it. I'd have loved to have seen you analyse a company that I am familiar with. And that's why...
Susan, I just want to give you a heads up. You're frozen again. If you can do what you did last time.
Oh, yep, certainly. I will do that.
Okay.
Yeah. No.
Okay.
I will know pretty quickly. Yeah, whatever I did there is what I need to do. So that should be okay there again, Jerry and Joey. Okay. So what he said to me was, it would be great if you could analyze a company that I am familiar with. And so therefore, what I'm going to show you is how I came up with the 2 stocks that I did. So here's what you can do on the VectorVest system. Go to Viewer and go to Events Viewer. Okay. So I'm just going to click on Events Viewer here. Now, when I was looking, of course, for today's date, it was a good bit ahead of when I was planning this. So what I did was I said, okay, I'm going to be presenting on Saturday, the 2nd of March. Let's just see what stocks back here at the end of February are going to be presented. Okay, and let me go right on over here. So I'm looking for the last week in February. Here we are. Okay, 26. Press OK, and here we are. Now, what you'll see are the stocks that have got the earnings dates coming up, and as soon as we stop, yeah, there we go. Now you can see here, so these are all of the companies over here on the right. All of these are the stocks that have earnings on that particular day. So what I did is that I scrolled over here and then I scrolled on down, and in there I found 2 stocks that I thought that everybody might be familiar with. On Tuesday, down here, we had eBay. There we go. You can see here we had eBay, which is the reason that I picked that. And on Wednesday, let me keep on going there. When Jerry said it's earnings season, he wasn't joking, was he? Let me just keep on going on here. And then on Wednesday, I went as far as HPQ. Here we go, Hewlett Packard. And that's how I picked them. That is how I picked the 2 companies today, is that I just wanted to take that feedback on board. By the way, of course, if you have any other feedback about stocks that you might like to see analysed from an earnings call perspective, the next time that I'm here on the forum, please do let me know and pop it into the chat there right now. Of course, we're always interested in what you have to say along the way. All right, so now let's move on. And now that I have my 2 stocks, I'm going to go to the home page. I'm going to go to Stock Viewer. And what I'm going to do is I'm going to go back to Monday. Okay, so let's pop back in time here. And I'm going to go back here to Monday. And let's take a look and see what was going on at the time with my 2 stocks. I'm going to press OK. And I'm going to add in these. So we have eBay in here and also HPQ. Now, bear in mind, look what happens when I type in Hewlett Packard. Okay, Hewlett Packard. You can see here what happens is Hewlett Packard Energy comes up. So or Hewlett Packard Enterprises, sorry. So that's not the right company. HPE is the stock that you'll see. It's HPQ. That's the company that we're looking for. That is Hewlett Packard, the printer company. Now, here you go. Would these have come up in my search a couple of days ago? No, they wouldn't, because look at the recommendation. It was a hold. It wouldn't have appeared on my screen at all. I'm looking for stocks where the RS is above 1.2, which they're not, and where I'm looking for a recommendation to be a buy, which they're not. So I do want to, I want to make sure that you can see the consistency in my approach here. What I look for, personally, for me, is what suits me. And Rick said at the very beginning, you know, we talk about the disclaimer, we talk about we're here in an educational capacity in general, etc. So I do what I personally do when I share that with you. But when I did get that piece of feedback, I wanted to focus on this way. So I just wanted to show you the difference in my approach. All right. Now, let's now see if we take a look at both of these stocks. Let's just graph them and let's see what happened. I'm just going to go for the past month, but what I do want to do is I want to go where we are just finishing. Yeah, just want to finish at the end of the start of the week here. Okay. Yeah, bring it on there a little bit and another little bit. Okay. So if you look here at what I'm showing you now, you'll see here in the case of Hewlett Packard over the past month, it has, you know, had a bit of a Not a whole lot going on, but it has pretty much, before the earnings happened on the 28th over here on Wednesday. So before that, on the month, it was flat. You can see there that when I look at the start of the month and when I look at the end of the month, pretty much flat, okay? And then, as you can see after that, then the market was quite disappointed with what happened. And then that was followed through, if I get then to the end of the month, bring us right up to yesterday's close. There was a bit of a bounce after that, more a defensive buy than anything else. But look at what happened with eBay. eBay was a totally different story. First of all, what is the same is that it had a bit more of a less flat month, we could say. But look at this big difference. When the results were made public on Tuesday, look at the difference. The stock jumped 3% after the earnings were announced. So as you can probably guess, the story that I'm about to tell you about both of the stocks were markedly different. There are some similarities between the two companies in terms of the decisions that they are making or have had to make recently, but what there is a big difference on is the timing. So I will walk you through both earnings results, and I'm going to compare and contrast along the way, but I particularly wanted to point this out to you. Interestingly, after the results were announced, then we can see here that eBay became a buy, Hewlett-Packard did not. So let me move away from the graph now and let's just jump to yesterday. When the market closed yesterday, what stories is the market telling us? Okay, here we are. As you can see here, Hewlett-Packard did jump up significantly yesterday, and again, that was in response particularly to a cut the day before. But let's walk through both of them. Okay, relative safety in both cases haven't topped 1. In fact, Hewlett-Packard has more consistent. It has more consistent and predictable earnings. Look at the two business models. So think through the two business models here. I'm sure you're all familiar with both of them, but just let me walk you through them briefly because I don't want to assume that you do, so that then when we get into understanding how their earnings have been changing and growing, you'll have an operating assumption then on the basis of how these businesses work. So what happens with eBay? Well, in the case of eBay, let's take what's in front of me right now. Let's take my phone. My phone is here in front of me. I decide that I'm going to upgrade. So I'm going to sell my phone on eBay. Is there repeatable business here? Well, yes, of course, because then I could sell the vase that's over there, or I'm looking around now for inspiration. My handbag that's over here, maybe I want to sell those in the future. And of course, maybe I am somebody that simply has set up an eBay store. But on the other hand, is there repeatable income on the part of the buyer? Well, there certainly is a huge amount of brand recognition, yes. But if we look at HP, I remember when I would have first learned about HP, it was one of the companies that was referred to in the book Good to Great. And I remember thinking about HP being, the company that sold printers and then obviously desktop computers. But you bought a printer, when I bought a printer first time, you bought one until it broke. And you bought ink until it ran out. It's interesting now, of course, is that HP has moved to a much more repeatable model, which is now there is predictive analytics in the printer to let HP know when I'm running low on ink, and now it can actually buy it for me, provide it for me. It has also now introduced a new model around that related to the hardware of the printer as well. So as you can see in the case of HP, there is quite a significant amount of repeatable business, and that of course then will tie into the predictability and repeatability of its earnings as well. Over here, you can see both of the stocks are undervalued, interestingly enough. Both of them, you can see here in the case of eBay, the price is at 48.05. As of yesterday's close, VectorVest has determined its value at $61.50. And down here, HP is the same. $29.41 is the price, whereas it says that the value is $42.16. Moving on forward, then we can see that the relative value here is actually higher in the case of Hewlett-Packard. And that is the relative value is looking 1 to 3 years ahead, the capital appreciation potential of that stock. Now, over here, of course, naturally enough, eBay is stealing a march in HP. Its RT, its relative timing, is at 1.2, which is, of course, significantly higher than 1.09. But isn't this just striking? It is at 1.14. Now, ladies and gentlemen around the world, of course you will know, or at least I certainly hope you know, Rick is the person that you meet most often when you come here to the VectorVest User Group International Forum. I'm somebody that meets you from time to time, over time, but I can assure you that there is a lot of work and planning that goes into making sure that this happens. And as you all know, if Joey wasn't here, well, then we wouldn't be here. there is a lot that happens here. So I cannot say to the team, well, you know, I'm just going to wait and see what happens when the time comes. Put me down on the ticket for giving the keynote presentation on Saturday, the 2nd of March. And you know what? I'll see what I'll say when the time comes. It doesn't work like that. What we have to do is we have to put forward what we're going to speak about long in advance so that all of the team can prepare, and particularly all of the moving parts can move together in unison. And what I find interesting is that despite the fact that I picked these two stocks, the way I showed you, I went onto the earnings calendar, I looked for two big names, I looked for this particular week so I could talk to you about the before and after. Little did I know that the two stocks that I would pick would end the week at the same VST. That is just totally an accident in circumstance. So here we have two stocks with VST of 1.14, and look at the PE ratios in these stocks. They're tiny. They're in both. Okay, both of them are either, well, what I was going to say is they're both below 10, but they're not both below 10. One is 10.5. But you see my point. They're practically a single digit. This is very, very low as a PE ratio in this case. So I'm just going to go back to where I had it ranked there in the other way, which doesn't really matter, but just so that you can see in the same way. So our PE ratios are the same, or sorry, they're quite close together, but they're very low in both cases. Now, moving on from here, both of them have had a pretty tough time. And we're going to look into what happened in eBay, not this particular earnings report, while I'm going to walk you through all that. I do want to make reference to the last quarter, because what happened last quarter is, of course, the reason that this quarter's results were so much better. So I will talk to you about the comparison between that. And as a lot of them talk about, particularly in the case of HP, they talk about, you know, maximizing long-term share value. Well, when it comes to looking at the long term or the longer term, we look at the comfort index. Now, the comfort index, to those of you who are not familiar with it, comfort index is my second favorite indicator in the VectorVest system. I no sooner say that, and I'm sure you're thinking, well, I wonder what's our first. My first one is VST. I'm a big fan of VST. But my second favorite is the comfort index. And that's a stock's ability to withstand severe and or lengthy price declines. Anytime you've heard me speak at this forum, anytime you've heard me speak on the Hot Stocks panel, anytime you would have seen me present in my own shows in the past, you would have heard me talk about CI. So I won't elaborate on it today. If any of you want to learn more about it, go onto the green book, of course, and there's a full chapter on it. Or if you right click and view full stock analysis report, you'll see an explanation of it in there. But in the case of both of these stocks, the CI is below 1 in both cases, and in fact well below 1, which shows that there have been severe and or lengthy price declines, and that is potentially what is leading us to the value that is in both of these stocks. The growth rate for eBay is higher. It's 14% per year, and when you have got a growth rate that is higher than HP's, of course you can expect that you would have a higher valuation. Of course, we can expect that investors would pay more for $1 of eBay's earnings as distinct to HP's, and that is why you particularly see a difference there in between the two. Both of them as well, I've scrolled over now a bit too far, both of them have dividend yields that are significant. You can see 2.25% in the case of eBay. Another reason that the stock had a big jump up is they announced an 8% increase in that dividend. And as you can see down here, HP have had so they have a dividend yield of 3.75%. Both stocks, both of them, announced share repurchase or reported share repurchases over the past while as well, particularly HP saying that it's still active in the market looking ahead. Okay. Now, let's move on now from analysing the stock today to really getting into the nitty-gritty of what happened during the earnings call this week. Now, I'm going to stop sharing here for a moment because I want to check in on the chat, and I just want to see if there's anything there that I need to refer to. Let me see there what we are looking at here, okay? Let me see, we're saying, some people saying hello, Susan. That is lovely. Thank you very much indeed. Indeed, Drew. That is lovely to see here. I see there that there are some conversations there as well, just around the trial and so on. I know that Joey is always on the ball, as we say here in Ireland, to make sure that if any of you want a link to a free stock analysis or a link to a trial so that you can try this out yourself, of course. I know, Joey, you'll take care of our subscribers there and everybody viewing today. Let me also see here. I also see, okay, a couple of people talking about my screen. That's great. And also I see some conversation about HP and their experience of it. And oh yeah, one person there has asked about what is the green book. Okay, let me show you exactly what I mean by the green book before we get into the nitty-gritty then, as I say, of the earnings report. Okay, let me just go back there to sharing my screen. Okay, now what I mean by the green book, it's this. So for anybody who is a VectorVest customer, I'm going to bring you over here to the training tab. And on the training tab, so generally when you log in, you might see the training tab for the first time, and then after that you customize your home screen. Now, Rick took you through his home screen and a range of things that are on it. Interestingly enough, I found a picture of myself and Rick here when I logged on to look at my VectorVest system this morning, so you won't miss us. Anyway, going back to the training, over here you can download what we colloquially called the green book here at VectorVest, and that is Stock Strategies and Common Sense, and that was written by our founder, Dr. Bart DeLido, some time ago, and it has been revised several times since. But over here, this book outlines a full chapter on every VectorVest proprietary indicator. So if any of you are a VectorVest subscriber, of course you can go to the training tab at any stage and download it. For those of you who are not, you can take a trial, and again, if I could ask here, Joey, if you could pop the link into the chat, and then anybody who takes a trial, again, same thing. You can just go into the training tab and then download the book. It is a very good read, I have to say. I've read it several times myself. All right, now let me now get into what went on. I have a lot of links open here to show you. Okay, so let me now walk you through what went on during the earnings reports this week. So we had the eBay one on Tuesday, and we had the Hewlett-Packard one on Wednesday. So in the case of eBay over here, there's about, let me see here, there's 1, 2, 3, 4, 5, 6 things that I wanted to really pick out, because at the moment it's 5 p.m. in Ireland, and I know that it's 12 noon in Eastern time. I am going to take you through both of these reports over the next 25 minutes, and I do promise to be punctual. I always am. So I'll be handing back to Rick in 25 minutes. So I have a lot of ground to cover, and I also want to take the opportunity as well to be able to answer any questions that you have or any comments that you have as well. Okay, so in the case over here of eBay, you will see just very top line, we can see here that revenue was up 2% on an as reported basis and up 3% on an FX neutral basis. So that means when you take all of the money that they generated in terms of sales and translated it all to dollars, they're up 3% on a foreign exchange basis. That is in contrast to Hewlett-Packard, who I'm going to show you, were down 4% in revenue and down 5% when it comes to constant currency. So that's one difference. Now, this is the name of the game when it comes to eBay. eBay's basic fundamental model, every other thing that eBay does, which I'll go through as well, but everything that eBay does would not exist only for the fundamental basis of matching buyers and sellers together. So a buyer buys something like a handbag from a seller who then sends that handbag directly to the buyer. And then, of course, one leaves feedback for the other, etc. That is, when it comes to the actual amount of goods that are sent through eBay, that is gross merchandise value. That is, of course, fundamentally, sorry, I should stop saying that word because that means something else when we're analyzing stocks. That is essentially the basis of what we need to look for in understanding the health of the operating model of eBay itself. And as you can see, it had gross merchandise volume of 18.6 billion, and that is up 2% on an as reported basis. Now, it's important, it is very important that I explain one thing to you here. First of all, I just want to point out the 2.6 billion and the 18.6 billion, they're the fourth quarter figures. You'll see the full year figures in a moment. But let me just explain something about eBay's looking at its revenue that I need to make sure is very clear before I move on. Let's just say that I sell a handbag to Rick because Rick would like to buy a handbag for the lady in his life, okay? Let's say that I sell my handbag, I'm going to say for $250, right? Now, eBay does not consider that revenue, and that's the key thing that's important. They consider that part of gross merchandise value. The cost of the handbag here is what is particularly relevant between Rick and I. But the revenue that eBay collect as a result of that is their commission. That's when they're talking about revenue, they're not talking about the total amount of money that passes through their bank account. Instead, they're talking about the commission that they actually earn in between the transaction between Rick and I. Now, in HP, it's different. If I go into a shop and I buy a HP printer, or if I subscribe to one of their subscriptions, well, then the money that I pay to HP is theirs. So the revenue in that case is going to be, it's simply revenue, and I'm not going to have to explain anything else about it. So two very different business models. And anywhere else where you see money pass through, any sort of fintech company or anything else like that, it is just important to bear that in mind. Quick side note, the last time I was here with you all online, and specifically with Rick, was when I was analysing Lululemon's earnings. Great stock, great earnings and all the rest of it. And again, I was making a comparison of if Rick was to be buying Lululemon's apparel versus me. So he always seems to get stuck here with the female analogy when I'm in the room. But then again, that is diversity of voices, Rick, isn't it? So moving on here, as you can see, of the $18.6 billion of products that moved through eBay, 2.6 billion of that, or well, some of that 2.6 billion, some is earned from other parts of the business, as I want to explain. But as you can see, a much lesser amount is how much they actually take in on revenue. Then, as you can see here, we've GAAP and non-GAAP earnings. Now, one of the key things I wanted to talk you through today is GAAP and non-GAAP, because you hear this in all of the earnings calls, particularly in the States. They all talk about the difference in GAAP and non-GAAP. And they don't explain the difference necessarily between them, and you don't need a degree in accounting to understand it, but I will go through this and I'll show you where to find it, just so when it comes to understanding the difference between the two, that you have, you know, a quick knowledge of that. As I mentioned, they returned 379 million to shareholders in Q4, including 250 million of share purchases and 129 million paid in cash dividends. And as I told you, the markets reacted very well to this, that there was an 8% increase in the prior quarterly dividend. And the board has also authorised an additional 2 billion stock repurchase programme. Now, the market looks at stock repurchasing in two different and contrasting ways. On one hand, investors like it, because if the company is buying back its own shares, just stick with me here now in terms of the numbers. If the company is buying back its own shares, you still have X amount of profit, but now it's divided among fewer amount of people. And therefore, that drives up the earnings per share. Because if the earnings is constant or growing, and it's divided among a fewer number of shareholders, well, then, of course, the EPS goes up. If the earnings per share goes up, of course, typically as well, shareholders like that, and then that can drive a price higher. On the other hand, I know they're all doing it, right? I know, sorry, not them all, but I know we're hearing lots and lots about share repurchases and have done for several years now. But the question of share repurchases then, on the other hand, is, has the company run out of investment opportunities or new ideas? So that is the way the stock market looks at it. Both HP and eBay look at it, or both companies have embarked on them. And as you can tell here, they're both continuing to do so. So I just want to explain the way in which the market looks at that. It took more notice over here of the 8% increase rather than the other. All right. Now, just to come down here then, just to jump from the fourth quarter up to the full year, as you can see here, revenue was 10 billion. So this is the comparison between the fourth quarter and the annual. Up 3% on an as-reported basis, up 4% on an FX neutral basis. So what does the market say here? Well, here's exactly what it says. Think about when the fourth quarter is. Now, in the case of eBay, of course, the fourth quarter brought us up to the end of last year. What does the end of last year include? Christmas. So when you see the fourth quarter that the revenue was up 2% in comparison to the revenue being up 3% on an annual basis, you can see that it actually did better overall before last year's fourth quarter. And that can often, you know, raise a question in the market to say, well, what is it about it that it's not keeping pace with the year? Again, the good news certainly in eBay certainly outstripped the bad news, or less than impressive news. And again, I do want to there's one particular number that came up in last quarter's earnings call that I want to refer to, which also changed the tone from a negative tone to a positive tone this time round. Moving on down here, you can see all of the other things, are the other characteristics. So GMV, again, gross merchandise volume, was down 1% on an annual basis. GAAP and non-GAAP, as you can see here, these were the earnings per share. And this is the number that investors are particularly keen to watch, because everything that I've said so far, everything I've said to you about the revenue, even what I've said about the share repurchases, the increase in the dividend, including also the income that it generates and the income per share, all of that is in the past. It's all been done. Okay, the market has processed the information. These numbers, though, this tells us what happens on a daily basis. This tells us what happens in eBay on Wednesday, on Thursday and Friday, which means on an operating basis. This does not include any acquisitions or any divestments. It doesn't include what's going on in terms of its investments in if they have any other assets. This doesn't include anything that happens with the pension. This is just down to the actual money and the percentage return that it makes on a day-to-day basis. So on its GAAP earnings, what this means is that for every dollar that eBay makes on an operating basis, they are making a profit of that of 19.2 cents. When we take non-GAAP into consideration, it is significantly higher. And that's very obvious when you'll actually see, when I explain later on, the difference between GAAP and non-GAAP. These are the numbers to watch closely. These are the numbers that bring us through how the company is being run on a day-to-day basis, which itself then will inform what happens up here. And then also, as I mentioned, about share repurchases, etc. Now, next now to move on to the resilience of the business model. Okay, of course, eBay is exposed to the general economy. Of course it is, because the more confident that I might feel as somebody that's either selling my handbag or buying another one, the more confident that I might feel about my earning potential or how much money I have in the bank, or the impact of inflation, or the prospect of a salary increase in the future, etc. All of that, naturally enough, is going to be effective, or it's going to have an influence. But it also has another product which is called first-party advertising, and that is, let me go back to me selling my handbag to Rick for the lady in his life. Perhaps, of course, I am competing against lots of other people who are selling things along the way. How do I make sure that Rick sees what I'm putting up there first? Well, we have the age-old typical thing, of course, that one would do, which is pay more for it to be advertised. So first-party advertising means that eBay takes its own pool of sellers and says to them, which of you wants to make sure that your product gets seen more in terms of promotion or in terms of promoted ads, etc. That, as you can see here, that was up 33%. That was up a third. On an as-reported basis, and slightly less, but still very significant, 30% on an FX neutral basis. And then the total advertising offer generated 393 million. Now, this bit is worthwhile, and I'm keeping a close eye in my time here. This bit is really worth understanding if you're interested in, again, what drives the business. If there's one key comparison that I saw between HP and eBay this week, is their focus on AI. Now, I could probably tell you that about every stock, right? If you go in right now and you look at the top VST stock at the moment in the US system, it's NVIDIA, right? So everyone's talking about everyone's talking about AI. We're all looking at Mr. Musk being in the news again around what he's doing at the moment with OpenAI, etc. Right? So AI is the name of the game. In the case of eBay, they talk about two things in their earnings report. Number one is the ability for everybody who puts up a picture of their product to remove any what they call background noise. In other words, to take away anything in the background. Because of course, the better the picture looks, the more attractive it is for the person to buy it. And then the second thing is, and I think this is particularly interesting, is that they also have what they call a magic description. And that is that when I upload the picture of my product and I put up the title of what the product is, it generates a description. Look at this number. Rare you see 100%, isn't it? Look at this. 100%. Let me just get the magic description here. Oh, you know where it is? It is actually, sorry, it's actually in the transcript. Oh, yeah. Well, I won't go through it. So they basically have 100% of take up on using the magic description. That's what I wanted to show you. So when you upload a product to eBay, it can actually generate its own description. And I am keen, because I have the earnings transcript here. I am keen just to show you what that type is. Yeah, okay, I'm just going to bring it over here to you. And it is this. It is, in terms of our customer-facing features, we continue to iterate on our magical listing experience that has already been used by millions of sellers, which we believe makes it one of the most widely used Gen AI features in e-commerce today, generally. Generative AI descriptions have rolled out to 100% of users in our top 5 markets. So that just shows you, again, how they're using AI. I'll talk to you about what HP are doing when we get on down there. A couple of other things here, I won't spend much time on them. They now have predictive analytics for, as you can see down here, in eBay Motors, so that then AI can predict when things are going to break down. A bit like actually what HP do when it comes to them predicting when the ink is running low on a computer, and then it just generates more. It also has, it's bringing a way of harmonizing costs by people can buy multiple things from a single seller and just make sure that when they're coming from different parts of the world, that it lowers costs on the part of the company and on the buyer. And then the other thing that I think is important to bring up, it's just interesting there listening to Jerry talk about, an admission to the S&P 500. What, of course, is equally as interesting is just how much companies these days are talking about being admitted to sustainability indices. The ESG investor is alive and well. To those people who aren't familiar with what I'm talking about when I say ESG, that's environmental, social and governance. There are a series of metrics that look at how a stock is performing across the environment, social and governance. So as you can see here, it's an impressive figure that it talks about here of just how much, because you're taking pre-loved goods and they're being shipped around the world as distinct to buying new things, and the cost involved in new things, it really does have a really significant impact on that. But how that turns into money, or how that turns into the difference for investors is this. So eBay was included in the Dow Jones Sustainability World and North American indices for the 5th consecutive year. So that is where you've got your ESG investor, as I say, alive and well. Now, quickly in a rapid fire round, just to take the pulse here and what I want to talk to you about. I want to talk to you about the full quarter and full year results. And that is revenue is up and earnings are up. The impact of AI and strategic initiatives, which I've spoken to you about. First party advertising, which I've spoken to you about. Sustainability impact, which I've spoken to you about. Two last things. I want to talk to you about 1,000 jobs. 1,000 jobs. Okay. That again is on the transcript. Let me pop on over here. So this is where the company last quarter, this is the thing that I've been saying, they had to let go 1,000 people. The markets didn't like that at the time. So yeah, here we go. Here we go. Now I'll bring this over here too. So here you can see including, and then organizational changes were announced to simplify execution and reduce the workforce by about 1,000 roles. That was done last quarter. As I say, the markets took that as, like, if you actually look at the way in which that was phrased, specific, and I'm almost quoting, right? I'm almost quoting. I don't know if I have it exactly word for word, but I'm almost quoting when I say eBay said that their costs outstripped their growth, and thus, as a result, they needed to let go of a range of people. Whereas now, this quarter, we can now see the benefit of them reinvesting in various different things since then. That was the thing I wanted to say to you about the comparison. And one last thing, I want to show you the difference between GAAP and non-GAAP, because eBay does a pretty good job of explaining it. Way down here, and they just, yes, here we go. Okay. These are the various different elements that differentiate the difference between GAAP and non-GAAP. But I'm only going to focus on this one up here. Okay. Now, let me give you two different examples here, right? Let's say Jerry and Rick both work for me. Both of them are staff members of mine. Now, in the case of Jerry, I am going to pay him $1,000 a week, and that's it. Okay. No more. I'm going to pay him $1,000 a week, and he's great. And I'm going to pay him that, and he's going to pay his taxes, and that's that. However, I know, just like L'Oreal, you're worth it, Jerry, here, a lot more than that. Now, here we go. This time I'm going to pay Rick, right? So Rick works for me too. I'm going to pay him $500 a week, but here's the difference. I'm also going to give him the option to also buy some of the stock at a certain price. Now, the difference between GAAP and non-GAAP is one of them takes that, actually, let me finish my scenario here. In the case of Rick, the value of that option at the moment is $500. So I pay them the same amount in terms of value. Only in the case of Jerry, I pay him $1,000. In the case of Rick, I'm paying him $500. And in addition, I'm going to pay him $500 worth of stock options, which of course, no money actually has changed hands. Now, that is stock-based compensation expense and related employer payroll taxes. Now let's pop back up here. And now you can see the difference here between the two. So in the case of GAAP now determines that if I'm going to give and make this part of the compensation to Rick, well, then I need to take that into consideration and I recognize it at the time at which it's given. Whereas instead, non-GAAP says, but that stock could fall to zero. So that doesn't mean that I'm going to apply that right now. So when you look, I remember analyzing Twitter's results when it was public years ago. And I remember I bought Twitter because I had analyzed it at the time. And I remember when you looked at the difference between GAAP and non-GAAP, one of them said Twitter was profitable One said it wasn't. And that was why. It was the sheer volume of what some people might call that sweat equity, etc. But that's the difference in between the two. It's not a matter that's academic, but it is important that when you're looking at both of them, that you do get an understanding of how they work. Okay, now I've taken you through eBay and I've taken you through the long way around it, but what I've also done is that I've set the scene for how things were different in the case of HB, like the revenue, and how things were similar, like the focus on AI. So let me now pop on over here and I'm going to show you their PowerPoint. Okay, so as you can see here, this is the earnings announcement for Hewlett-Packard. And the opening, like among the opening line here in the transcript, right? If I go up here, look at the opening line of the CEO. Down here, before handing over, like that's all into now. Volatile. Where's the word volatile? Yeah, down here. We are managing, starting with our results. We are managing through a volatile external environment that continues to impact demand across our industry. This is reflected in our top line with net revenue down 4% year over year. Very different tone. Very different tone. It talks about the volatility in the industry, and of which is reflected not just here, but in various different parts as well. And what's interesting here is where eBay is talking about its initiatives in terms of AI, when it also talks about its first-party revenue, or its first-party advertising, etc. It's interesting when you look at the focus of HP. Look at what it is. I'm just going to search the word focus here. Yeah, this reflects our focus on managing our mix. So what does mix mean? Well, it means, like in VectorVest, for those of you again who are subscribers, right? So as you know, we have got a product that is, when you log in, you can analyze any stock, you can run a search, you can create your portfolio, you can create a watch list, you can analyze any company. But then on top of that, we have some courses, and there you're going to see Jerry. And also on other occasions, then there are some other products like ProTrader, which are particularly both powerful and relevant for people who are technical analysis traders. That is our mix. Our mix is the series of products that we have. So what they mean by managing our mix is that they need to manage which products that they are putting forward, number one, in front of their customers, but number two, how they're putting all of them together. And they have come up with some new innovations that I want to talk to you about. So they're talking about focusing on managing our mix, reducing our costs, and maximizing organizational efficiencies. And this is the thing, is that it just feels like HP is more focusing on managing what it's got rather than particularly putting its emphasis on growth, whereas eBay had a different tone in that. A big element, I'm going to show you now the comparison that they have with AI, is they're talking about the AI PC. Okay, there we go. So this is the AI PC. I saw Int'l particularly talking about this a little while ago. So imagine a PC that where you don't just Google, but instead you automatically use a search engine with an AI algorithm in there as well. We all know which one I'm talking about. But in addition as well, imagine a PC where you don't type anything, you just talk to it. Imagine a PC where you've got all of your folders that talk to each other and predict how things could be better, or they organize themselves better, or they automatically file each other, etc. That's the type of thing that an AI PC would be, is that it would have AI learning from everything that you would do in your PC. And of course, how HP can tie in with that offers a really big opportunity for them. Also, I want to show you their all-in subscription plan. And this goes back to the repeatable revenue. Yeah, no, all-in subscription plan. Okay, let me get it this way. All in. Yeah, here we go. So this week being this actual week, they're launching their all-in subscription plan, right? And I just think that this is an interesting one. So this is where you've got consumers will receive a printer, in delivery premium 24/7 support, and an option to upgrade their hardware every 2 years. Now let's go back to what I said to you about the first time I bought a HP printer. You went in, you bought a printer, and when it broke, you bought another one. Similarly, you went to the shop and you bought ink when the ink ran out. Both of them are no longer, where they've now thought, okay, how do we get a more repeatable model here? Because of course I could have a broken printer in the corner and not just got around to fixing it because I'm too busy. Whereas look, I actually need a better or a new printer, and I just haven't got around to getting there or whatever else, is now that it's sorting that out. And this is generating those more repeatable revenues that it needs to have that consistent operating model along the way. In a similar way, I also want to show you about ink, the ink subscription, Instant Ink. Yeah, Instant Ink. Yeah, but I want to show you. Yeah, look at this. Instant Ink revenue and subscribers continue to grow year over year. So this is where HP is looking and understanding at how much levels of ink I have in my printer, and as soon as it falls below a critical level, then it steps in and sends me more. Of course, one does need to sign up for that. That doesn't automatically happen, but again, that is that repeatable revenue stream. So Instant Ink revenue and subscribers continue to grow year over year. Total subscribers now exceed 13 million, and including more than 700,000 onto their Instant Paper add-on service. All of these, I think, are particularly interesting in terms of their business model for that repeatable. Now, I do want to also point out to you about sustainability. Going back to that ESG investor, look at where it ranked number 13. Yeah. So their sustainability impact strategy, I mean, at the end of the day, the paperless office is the antithesis of what HP's business of printing is all about. Now, I know there's a lot more to HP's business. They also have laptops themselves, they have workstations, they have commercial, etc. But they are now ranked 13 on this year's list of America's most just companies from Just Capital and CNBC, 5th straight year in the list, and their highest ever ranking, up 34 spots year over year, putting them in the top 2% of companies measured. While this is great, I would say that in the case of eBay, it's now in the indices that investors are investing in by virtue of the ETFs. It'll be interesting to see if an ESG ETF is among one of the ones that actually wins the competition that Jerry brought you through there earlier on. But I am going to bring you through the real reasons, or a couple of the real reasons that investors were disappointed. Two in particular. One is this. I want to show you another acronym. We love acronyms in this business, TAM. So you can see here top line results, and top line refers to sales as opposed to bottom line, which refers to profits. So top line results were impacted by lower TAMs in both personal systems and print. Personal systems, of course, being like a personal computer, and print being a printer. TAM, total addressable market. Now this is worrying, because remember when I picked up on operating margin and I said everything else I've talked about is in the past. Operating margin shows you how they make money consistently. But a TAM is a total addressable market. That is looking ahead. That is looking at the future total market that they may well address. And interestingly, they're both of those areas of which are very significant revenues in both of their cases. And I can back that up by showing you down here. Look here at their mix. 46% of their net revenue in Q1 of 24, 46% of that was in commercial systems. And then, as you can also see, there's an awful lot over here when it comes to printing. And then you also personal systems consumer here, which is like me. Personal systems commercial would be VectorVest. So when you take both of those, you're looking at both of them have lower market TAMs, and that for me is quite worrying, because does that show that their market is shrinking? And therefore, of course, they're going to have to really think about how they're going to compete among the AI market. One other thing that I wanted to, two last things, right? And then Rick, I'm back to you. But two last things I wanted to show you. I want to show you where the word slowdown, and look where's and geographically where the slowdowns occurred. Slowdown. Yeah, look here. While we saw stabilizations in SMBs, so that's small to medium businesses, and education markets, that's universities, we saw a slowdown in US enterprise and federal sales, particularly in the month of January. We also continue to see demand weakness in China due to challenging economic conditions, partially offset by strength in India. Now, if you just look at that sentence, right, and if you think about where HP was born and grew up, I'm sure you know that US is quite significant in that. But let me just actually tell you exactly what this means. Look at the regions here. When it comes to the Americas, they're looking at 7 billion over here in the case of the Americas, and look at the growth trend. As there you can see, look here in the case of EMEA, look here in the case of APAC there. So you can see the impact of China, and okay, slightly offset a little bit by India, and then Americas including US, and then yeah, specifically over here, the United States. So when you're looking at this, of course, there is a very, very, very significant part of their revenue generated from each of those regions. Okay, now I want to show you this. I want to show you this very last thing, and Rick, back to you. Any of you that have been on with me before, and where I go through an earnings call, I always tell you I love looking at the Q&A. I love looking at the Q&A because, generally speaking, of course, the team, the CEO and the team from Investor Relations, generally tell us a great story. They're very proud. They're excited about this, and they're committed to cost savings and all that sort of thing. But when you have got the Q&A, when you've got the questions from the analysts, this really uncovers and peels back the layers from people who spend their days analyzing earnings. And I want to show you this question from Tony, T-O-N-I. Look here. All right, look at this question. This is just a beautiful question. It sounds like you're expecting your printing margins to fall pretty notably in the second half. You were 20% this quarter, as I showed you earlier on. We're expecting to be at the high end of the range of the second quarter, to be solidly in the range of the second half. That would imply printing margins fall considerably. And that's possible. That's probably possible given that the hardware weakness has been pretty strong in the last few quarters. Now you know why they were introducing the all-in package, and that may translate into weakening supplies growth and therefore lower margins. So I'm just trying to reconcile if 65% of your profits are going to have lower margins, perhaps notably lower margins in the second half of the year, why are you optimistic? And if I roll out normal seasonality right now, it points to a 4% decline in revenues, which did happen. Are you expecting revenues to grow in fiscal 24? That's the type of analysis you get for free while looking at the Q&A. And you can see how Tim Brown goes on to analyze it. But that's why I would always say it's always worth understanding and listening to the Q&A at the end of the earnings call, because it does reveal things. Just you have a lot of very smart people who are constantly involved in earnings calls answering or asking questions that can really put people to the pin of their collar, and it's very, very interesting to hear. So I'm going to stop sharing now, Joey. I'm going to hand back to you, Rick. I do hope that I've certainly put you in a position now where you are going to buy that handbag after all. None of mine now are going up on eBay. But all the same, I'm going to hand it back to you at this point. Thank you so much indeed for having me. Thank you to everybody who has joined us today. And I will keep an eye on the chat over here and type in anything where I need to come back to you on, because I know I didn't get a chance to go back and review, even though I said I would, but I certainly will make sure to comment along here if I can afterwards. Thank you indeed, Rick. Back to you.
Well, thank you so much for that, Susan. Such an excellent presentation. And it's really very uncanny, Susan, that somehow you knew I was in the market for a handbag, yet Jerry wasn't, out of all of us today here. And also uncanny that you brought up our previous appearance where you went over Lululemon's earnings. So, Susan, I have been waiting for you to come back. I did tell you that Ryan and I were going to go on a little shopping trip to Lululemon. So let's see what I have for you here. You recognize that, Susan?
Ah, yes, I do. Yes, I do.
I happened to be in this mall in Toronto, and what did I stumble across? And look what they have written on their window here.
Mm-hmm. Yeah,
Men, we've got your pants. Now, I'm sure, Susan, you're thinking, you know, there's no way that Rick is going to get close to that store. That's about as close as he'll get. You can see from my face, you know, the anticipation and the excitement. I can't wait to get in there to see what they have, this upstanding men's apparel merchandiser here. So maybe he won't get closer. Oh, maybe he will.
Lululemon in men's apparel, and I had a similar scenario where I walked through it with Rick. Little did I know how literally you would take it there.
Well, we aim to please. So here I am with this nice little number. Look at those pants. So my idea here, Susan, was I figured that I would turn these into my new trading pants and swing trading for sure. But when I got into my trading seat, I started squeezing the mouse a little bit too tight. I don't know what it was. And I got a little fearful for my account. Jerry doesn't like when I blow up my swing trading account. So I think I'm going to have to abandon these pants. And I don't know, maybe I'll pass them off to Ray or something like that. And maybe he'll find a use for them. But I wanted to make sure that I came through and I actually did make that trip to Lululemon. I can't speak for Ryan. He didn't provide any pictures, so I don't know how he fared. But anyway, I thought we could finish off on that note. And folks, well, I'd really like to thank Jerry for everything today, and thank you, Susan, for that excellent presentation as well. We'll thank Joey And we know Ray's in the background handling comments here as well. So thank you everybody as well for spending part of your Saturday with us and coming and joining us here. And we'll bring up our last slide. So thanks for watching. We do have our international numbers up there. As usual, any issues, reach out to our product support and training staff if you need help getting ready for that, for the upcoming competition in the US side that Jerry covered. Reach out to them and they'll be able to help you out. As I mentioned before, the replay of this recording will be available on the VectorVest YouTube channel immediately after the webinar. And you do have our support email at the bottom. Also, we've got Ray's email for anybody who has any ideas for upcoming international user group forums. All right, so with all that said, I'd like to thank everybody and we will catch you next time. Take care.
Bye, everyone.
Have a good weekend, everyone.